Wednesday, October 27th, 07:26 a.m. New York time. This video, I'm going to show you a comparison of investing in equity index stocks, stock ETFs, and single stocks. We'll look at a 20-year performance, and you can compare them of how they've been versus each other over that duration of the 20 years. And then hopefully you'll make better decisions going forward on deciding the better underlying investments. First, we'll look at the equity indexes. This is a line chart, and we're looking at the S&P 500 has 500 largest publicly traded companies. So over the 20 years, we are at all-time highs since yesterday. Outstanding. The NASDAQ 100 over the 20 years, just shy of testing the all-time high again. The Dow Jones Industrial Average was 30 U.S. largest publicly traded companies, all-time high. The Russell 2000, it's not at all-time high. It's been declining since the high this year, but it's still way off the lows. It's just not hitting all-time highs currently. The Dow Transports, same thing, going back up to retest the all-time high, but over the 20 years, outstanding. And the Dow Utilities. This year, we have not hit all-time highs. That was the prior year. It's still outstanding over the duration. Now I'm going to show you those same ones year to date. We'll start off with the S&P 500. We'll look at the candlestick charts. Again, this is now daily charts year to date. Yep, yesterday all-time high in the S&P 500. NASDAQ 100, yesterday all-time high. Dow Jones Industrial Average all-time high. Russell 2000, we're right here. That's what happened on the right side of the chart. There's the all-time high. So it's more of a consolidation. It's a lot of whipsaw in between. It's not trending compared to the other ones that are outstanding. The Dow Transports, here is the all-time high. And here we are right now. Look like we're on target to retest it. The Dow Utilities, also, here is the high of this year, but we're below it. So now we're going to look at the stock ETFs. These stock ETFs are the 11 sectors that are inside the S&P 500. So briefly, I will say again, the S&P 500 is the broad stock index. Institutional investors, individual investors, and most news media cover that S&P 500 is very diversified. In the S&P 500, there are several stock indexes in it. Inside the S&P 500 is the NASDAQ 100, the Dow Jones Industrial Average, the Dow Transports, the Dow Utilities, the S&P 100. Those equity indexes are inside the S&P 500, which you're looking here. Inside the S&P 500 is also broken into 11 sectors. These sectors have stock ETFs. I will go over each one and mention the percentage of that sector in the S&P 500. First, we'll look at the XLK. That's a stock ETF, XLK, and it's the technology sector, which makes up 20.8% of the S&P 500. Look at that, outstanding. Here we go, looking at it year to date, also outstanding, all-time new highs. Next, we'll look at XLV. Healthcare makes up 14.9% of the S&P 500. There we go, for the last 20 years. Outstanding, the last few years, taking off. Yep, pretty much the low, yep, right there, the low from 2009 to now. And year to date, we are not at all-time highs. Year to date, we're below. Next, we'll look at XOF, the financials, the big banks. over the past 20 years, a lot of whipsaw. Oof. But right now, all-time highs. And year to date, all-time high. Next, XLY. That is consumer discretionary, which makes up 10.2% of the S&P 5. So here again, we're looking at 20 years, all-time high right now, outstanding. Now we're looking at year to date, also all-time high for the year to date, outstanding. Next sector is XLC. That is the communication services. Okay, we're looking here at 20-year chart. This is a line chart, 20-year. And look, it's declining currently, but way above the lows, which was all the way back here. For year-to-date performance, also declining. It's not a crash. They're declining. They're doing retracements. They're doing corrections. Next, XLI. That's industrials. Industrials makes up 9.7% of the S&P 500. 20-year line chart. This year, we hit the all-time high. Year-to-date chart, there's the all-time high. It looks like we're on target, gunning for it again. Next, XLP, consumer staples. Here we go, 20-year chart. Outstanding, look at that, big run up. And year-to-date. Here's the all-time high for year-to-date, and we're just below it. Looks like we're doing a retracement. Next sector, energy sector, stock symbol XLE, makes up 6% of the S&P 500. And looking here at the 20-year chart, on the line chart, way below the high. There was the high several years ago, 2014. So a lot of trending, but not all trending to the one side. The past 12 months, all-time high right now since yesterday. Next, XLU, utilities. This makes up 2.8% of the S&P 500. Wow, look at this 20-year chart. Huge run up since 2009. And a lot of whipsaw last year, and here we are now, still inside the range of last year. Looking at the year-to-date performance, there's a high. Here we are right now. And now real estate sector, XLRE, makes up 2.7% of the S&P 500. 20-year performance, oof, a lot of whipsaw here. Year-to-date, here's the high. And it looks like we're on target going back up there. And the last sector of the 11 sectors, which is materials, stock symbol XLB, makes up 2.5% of the S&P 500. Again, we're looking here at the line chart over 20 years. This year, we hit the all-time high. Outstanding. And year to date, there's the high earlier in the year. Here we are right now on the far right, way above the lows. So a lot of them are doing very well. Some doing outstanding, better than others. Well, again, looking here at the S&P 500 index, if you're invested in this, this is performing better than most of these stock ETFs sectors, because right now, again, I just showed you we're at an all-time high in the equity index, versus some of these sectors are not at all-time highs. So again, good investment, good money management, being diversified in a good equity index, and then secondary, if you want to be more diversified, you can include stock ETFs that are in the 11 sectors, the leadership. But now let's look at the single stocks. Single stocks, again, over 20-year performance. We'll take this category, defensive military stocks over the 20 years, which corresponds with the Afghan military war. Boeing, line chart, 20 years. We are not at all-time highs. We're currently declining. Year to date, there's a high for Boeing. Here we are right now. Interest too, they have earnings come out this morning before the stock market opens. So before 9:30 a.m., there will be earnings. Where do you think we're going to go from here in price range? Down further or reverse? Again, I'd rather be right now in leadership invested. General dynamics over the 20 years line chart. There's the high. Here we are right now making retracement of that high. Year to date, general dynamics. Well, earlier this week, we were at an all-time high. Sorry, that was last Friday. Yesterday, it gapped down huge sell-off. What does a gap mean? A gap means when it opens for trading and it gaps away from the prior day. So this was yesterday's trading day. And all this gap space between there, that's the gap. So prices never occur there. It just opened in the morning. It opened down here in the morning, ran up and closed here. Again, has not filled that gap yet. Huge. And we already see the all-time high was several years ago. It's been in decline. Now it's a retracement. And there we go, year to date, right here. Let's get a look at the next. Level 3, LHX. Over the past 20 years, nice run up. All-time highs this year. Year to date. Also, you can see gap down. There's a low for the year to date. There was a high last week, and it gapped down. Yep, it opened here, and it closed down here. Huge gap. Huge price range, 2 down. Next, LMT, Lockheed Martin, 20-year line chart. There's a low. There's the high. It's already been declining past several years. Year to date, well, here's the low for the year. Here's the high for the year. Yesterday, earnings release, huge gap down. It opened here and closed there. So it closed near its low of the day. Huge gap down, huge move, bad performer. And looking here year to date, the price range that occurred has been the widest for the whole year. Oof, it's not good. And for the over past 20 years, it's one of the biggest price declines. Next, Northrop Grumman, 20-year line charts. Here's the increase up, all-time high. Year to date, there was a low. The high was 2 days ago, and yesterday, gap down, huge gap down. Go to the next. Raytheon, I may be pronounced that wrong, apologize. Romeo Tango X-ray, the past 20 years. Since last year, it's been declining heavily. Then the retracement. Year to date, there's a low for the year. A few days ago, it was a high. It gapped down yesterday. So opened here, closed there, and then during the daytime, it went up to fill that gap. So performance-wise, if we look here again, the S&P 500, the past years, beautiful run-up. Yep, with retracements. What's a retracement? When it goes down. Not a what's that word? Sorry. Anyway, these are retracements, market corrections. It's not crashes. They're going to places to retrace, to reload with new buyers. And S&P 500 year to date, all-time high. So now one would consider it's potentially going to do a retracement sometime soon. And that retracement is the opportunity to look to reload, to buy, because it's much diversified than these single stocks I showed you, which had a lot of advantage over the last 20 years because our nation was at war, increasing the spending yearly for the past 20 years on these companies. Well, obviously you can see the performance already started to turn around for the past years. They start to decline. Yep, started to decline. So the smart money was leaving them past weeks, months, and rotating their money out of these stocks into some of the sector stocks I showed you. And if you're not looking to the sector stocks, well, I showed you the equity indexes.